just to clarify then, so you raise the money from the investors, you do the rehab, and so they basically are getting sort of a fixed rate that they can rely on at that preferred rate,
Mm-hmm.
and then you refinance the bank, and at that point, the bank will give you 75% of the new value, which is enough to pay off 100% of your investors, and then they still have an equity stake, even though you're paying off all their initial money.
That's correct. So the question then becomes, can you find a deal where you can force the appreciation such that you can do that refinance, retain 20 to 25% of equity in the deal as the lender requires, but then still have enough between the payoff of the prior loan, the underlying loan, and the new loan, and have that amount of proceeds to be able to pay off your investors. And that's really, as an example, the most recent acquisition that we made, which is in Arlington, it's a beautiful property right across the street from Cowboy Stadium. It's pretty amazing. It's a 44-unit deal. Interestingly, and these are where some of the opportunities lie, is that the financials that I received was, I think the best word to use, as my kids would say, was garbage. It really was, and my business partner, or the folks who ended up being my business partner for that transaction, just didn't know what to do with it. She was a realtor herself and just couldn't make sense of the financials. And so when they brought it to me, I was able to underwrite it. I have a great mortgage broker who I work with here locally in Austin, who was basically able to confirm what I had concluded, which was this is how much I would pay for it, which was $3.8 million. So the purchase price was 3.8. I knew for that type of transaction that we needed to, and based on the age of the property, that we needed to probably invest about $1 million in terms of renovating it. Well, one of the beautiful things that I saw when I looked at the rent roll was that of the 44 units, 8 of them had already been renovated and were renting at $1,300 per month, whereas 28 of the units were at $750 per month. So the question then became, can I do to these 28 what has been done to that to those set of 8 to get up to that 1,300? And you fast forward to where we're at now. Firstly, while we had it under contract, all 28 of those went from $750 to $850. That $100 increase alone for those 28 units was equivalent to about $500,000 of increased value, even before we closed on the property.
The old owner raised the rent $100?
Yeah.
Wow.
Yeah. And the other thing I saw on the rent roll was that virtually all of the tenants were on month to month, which means that we didn't have to wait a year or 6 months or whatever it was until we could actually start doing work. So based on sort of natural attrition, we started taking 4 units and then another 4 and have started to convert those. And where we stand today is we've got 10 of the 28 completed, not rented at the 1,200. I actually used 1,200 in my underwriting just to be conservative, as you want to do. And all 10 of those are at $1,350 actually. And that's not accounting for any additional income, because one of the things that we're doing, and I can speak to this later, is that in addition to providing what I would like to say is a safe, clean, affordable place for people to live. I mean, the word redeem, we're redeeming properties, we're redeeming the people, the residents that live there, as well as the financial performance of these assets. We're really looking to redeem the properties. And so the thing that we like to do, in addition to providing a clean, safe, affordable place for people to live, is to provide them with value-added services. And what I mean by that is, the utilities that they would otherwise have to incur on their own or pursue, electric, phone, cable, internet, those types of things. This property here had no internet at all. And so a lot of the feedback we got from residents was, hey, my kids are at home from school too, and we don't have Wi-Fi, and my hotspot is not working that well. And so we actually are installing that this coming week. And not only are we installing it so that they have access, we're actually working through a business partner to provide them with internet capabilities. So in other words, instead of them going to Spectrum themselves, they can buy the service through us and we deliver that service for them. And of course, we have a revenue share situation. And so it adds additional income to our properties. So
Wow.
it's just a really neat way for us to be able to continue to serve those residents.
Yeah. Holy cow. So you're hoping that Dallas wins a championship this year, Super Bowl, and that'll probably boost another couple $100, I'm sure.
I think the other thing, and we won't get to all these topics today, but the value of having a property manager such as the one that we have there, they're constantly coming to me with different ideas on how to add additional income. Given that this is literally across the street from Cowboy Stadium, they said, "Oh, you know what? We've established a partnership with a towing company or a parking services company, such that they'll ensure that if people are parking here that are not allowed to park here, they'll of course enforce the towing. But in addition to that, on game days, we've allocated, I think, a total of 8 to 16 parking spots." For game day use that we would be getting paid a premium for people to be able to park there.
Wow.
And so it's right next to, right across the street from Cowboy Stadium, and then the new Texas Ranger Stadium is right next to that. And it's, if I had to walk it, I would say it's about 800 feet, 1,000, maybe a click.
Yeah. Nice.
Yeah, so no, we're really excited about that. And so what I wanted to say about that is, with that, we raised 1.3, is that right? 1.38 from friends and family and business colleagues. When we do our cash out refinance, and we're ahead of schedule, probably March, April of next year, so less than a year from now. The value of that property we expect to be 6.7, 6.8. Which will enable us to do that cash out refinance, pay off the investors, and then they'll continue to retain their ownership position in that deal.
Wow. Wow.
Yeah.
Yeah, anytime you can double rent with a renovation, that's pretty impressive, or close to it, I guess.
I guess the thing that I didn't know, and what I was expecting really, Kirby, was that we would need to go and seek out new tenants, because I had no idea whether the current tenants would be able to pay that new market rent. And that's really what the market rent was. And I've just, part of what's been comforting about that renovation project is knowing that we're building and producing a really quality product, but it's one that has been in demand from amongst the existing tenants, but they just weren't able to access because the prior owner didn't invest the resources. So in other words, of those 10 that are already rented out, 9 out of the 10 are from existing tenants.
Wow.
Who were paying that lower rent, who are now ecstatic about the quality of the finishes, the things that we're doing to the property, and are more than happy to pay that new market rent.
That's incredible.
Yeah.
Great. Yeah, I mean, obviously you can't, every deal isn't going to be like that. But I think what you laid out there initially is a perfect model for people who, they want to understand, how does this multifamily game work? If you can do that, if you can find these, and it's not easy to find these type of deals where you can buy it, do the value add, renovate it, come up with creative strategies like the towing company, and then put it to a point where the value is going to totally pay off your investors. I mean, you're going to be successful. Like, that's just a perfect model. So I appreciate you kind of breaking it down for us in more layman's terms so I could understand it. Hey, hope you enjoyed this portion of the interview with Christian. If you did, give it a thumbs up, hit the subscribe button. If you want to hear the full interview, you can check it out on any podcast player. Just search for the Living Off Rentals podcast. Also, join the Living Off Rentals Facebook community. You can ask any questions there or discuss any rental investing related topics. I hope to see you there. If not, I will see you in the next video.